Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome back to Tax Smarts Unlocked. I'm David Robson, and today we're revealing your Paycheck's secret superpower, withholding. It isn't glamorous, but it might be the most flexible tool you have to avoid penalties, smooth cash flow, and keep more of your money working all year. Whether you're a W-2 employee, have a side gig, run an S corporation, or are retired living on Social Security and IRA distributions, smart withholding can make April feel boring. Here's the magic. Withholding is treated as if you paid it evenly throughout the year, even when you crank it up late. That lets you fix shortfalls, reduce surprises, and still comply. Our goal today is simple: get you just right. Neither a big refund nor a spring tax bill. Let's start with the modern Form W-4. The old allowances are gone. Step 1 sets filing status. Step 2 handles multiple jobs and a working spouse. Use the checkbox, or better, the IRS tax withholding estimator for precision. Step 3 claims dependents and credits like the child tax credit. Step 4 is your customizer. 4A for other income not from jobs. 4B for deductions beyond the standard. And 4C for extra per pay withholding. Step 5 is your signature. When should you revisit? After a raise, bonus, job change, marriage, divorce, new child, equity vest, or any mid-year drift. Bring recent pay stubs and last year's return to the estimator so it can model your year-to-date reality, then follow its W-4 suggestions and update your state form. Penalty prevention lives in safe harbors. You're generally protected if your total withholding plus estimates equals at least 90% of this year's tax, or 100% of last year's tax, 110% if your prior year AGI exceeded $150,000. Another shield is the $1,000 rule. After withholding and credits, if you owe less than $1,000, there's no underpayment penalty. Here's where withholding superpower shines. It's treated as if paid evenly all year, so a December catch-up on your paycheck, pension, or IRA distribution can close the gap immediately. Estimates don't get that treatment. When you're close to a threshold, increase withholding on the biggest check for the fastest, cleanest fix. Document your plan and verify results using the IRS estimator before your final payroll run. Then monitor year-end totals. Life happens. Withholding should adapt. Marriage or divorce can shift your filing status and marginal bracket. New dependents unlock the child tax credit or the credit for other dependents. A second job, lucrative side gig, or big raise often requires additional withholding to keep pace. Equity compensation, RSUs, bonuses, non-qualified option exercises frequently arrives late in the year with flat withholding that may be too low for higher earners. Conversely, a job loss, reduced hours, or large deductions from HSAs, IRAs, or charitable giving could mean you're over-withholding. After each change, run a quick paycheck checkup with the IRS estimator, adjust steps 2 to 4 on your W-4, and align your state form so everything points to the same target. Set calendar reminders for mid-year and pre-holiday reviews too. Let's demystify supplemental wages. Bonuses, commissions, and vested RSUs are often paid with federal withholding at a flat 22% rate, or 37% once supplemental wages exceed $1 million for the year. That may underwithhold if your top marginal rate is higher. You have options. Ask payroll to add extra withholding on the bonus check, or increase per pay withholding for the remainder of the year. For stock vests and option exercises, remember state taxes and FICA apply, and company defaults may not reflect your situation. Keep an eye on capital gains from same-day sales and wash sales that change basis. The theme: when equity or bonuses hit, run the estimator and proactively top up withholding to avoid April drama. High earners should monitor year-to-date brackets closely. Small business owners, blend strategies. If you or your spouse has W-2 wages, increase withholding there to cover business profits. It's automated and benefits from the paid evenly rule, making it ideal for late-year corrections. For sole proprietors and gig workers without a W-2, estimates still matter. Schedule them based on realistic year-to-date profit, not wishful thinking. Remember, self-employment tax applies to net profit, 15.3% up to the Social Security wage base, plus Medicare thereafter. Your return deducts half of SE tax, but cash must be funded via withholding or estimates. When a year is running hot, push more through the larger paycheck in the household. When it cools, dial back with a fresh W-4. Review quarterly books and reconcile projections before each payment or estimate. S-corporation owners can level up with a year-end payroll true-up. Because you run payroll, you can raise December withholding once profits are clearer. Step 1. Confirm reasonable compensation is in line. Step 2. Project full-year income, factoring distributions already taken. Step 3. Set a final payroll that pays normal salary and adds withholding, potentially via a bonus, to meet the 90% current year target or the 110% prior year safe harbor if your AGI is high. Coordinate state withholding and Medicare surtax exposure. This maneuver is powerful when estimates were light, distributions were heavy, and you want to eliminate underpayment penalties while keeping cash management tight heading into the new year. Work with payroll early and verify deposits post before year-end deadlines to ensure compliance everywhere. Deductions and credits drive precision. If you itemize or expect large above-the-line deductions, HSA, traditional IRA, SEP, student loan interest, enter them in W-4 Step 4B or in the IRS estimator so withholding reflects your lower taxable income. Claim credits in Step 3, coordinating across spouses to avoid double counting. Pre-tax benefits change the math. Dollars sent to a 401k, 403b, 457, HSA, FSA, or Section 125 plan reduce taxable wages, and thus the withholding needed. Roth deferrals do the opposite. They increase current taxable income. Choose based on your bracket today versus expectations later, and then align withholding. A mid-year switch from pre-tax to Roth without adjusting W-4 can create a surprise balance due. Review employer match rules and contribution limits to optimize savings each year. State and local taxes deserve equal attention. Many states use their own W-4 or withholding certificate. Update it whenever you change federal withholding or your life situation. Safe harbors and penalty thresholds can differ, so confirm your state's rules. Missouri listeners, review the current MOW-4 and brackets, and consider any local earnings taxes where you live or work. If you moved mid-year, worked remotely across state lines, or live in a reciprocal state, plan for credits and adjust withholding so neither state is short. Remember that state-estimated tax payment timing can affect itemized deductions, so coordinate state strategy with your federal plan. Check withholding rates, forms, and reciprocity agreements annually because legislatures change details. City levies may require separate filings and employer registrations. Retirees can master withholding too. Pensions and annuities use Form W-4P. IRAs allow custodian-level withholding elected with each distribution. Social Security accepts withholding via Form W-4V at fixed percentages. Coordinating these sources can replace quarterly estimates entirely. A favorite tactic: in December, take a modest IRA distribution with very high withholding. Because withholding is treated as paid evenly all year, that late move can catch up for the whole year and prevent penalties. If required minimum distributions apply, you can bundle the strategy with your RMD so cash and taxes move together. Review Medicare premium brackets and taxable Social Security thresholds as you calibrate amounts. Confirm state treatment, since some pensions or Social Security are partially exempt or taxed differently by state. Plan withholding accordingly. Common pitfalls: claiming exempt when you're not, forgetting a spouse's income or a second job, ignoring investment income, capital gains, or conversions, assuming a bonus's 22% withholding is enough, failing to revisit after a raise, and double counting credits or deductions across spouses. Avoid them with a routine. Action checklist. 1. Pull recent pay stubs and your last return. 2. Run the IRS withholding estimator. 3. Update W-4s and state forms for all jobs. 4. Use Step 3 for credits, and Step 4 for other income, deductions, and per pay extra. 5. Plan for bonuses and equity events. 6. Recheck after life changes. 7. For retirees, calibrate W-4P, W-4V, and IRA withholding before December. 8. Save changes, confirm on pay stubs, and track progress monthly without surprises. 3 quick case studies. Dual income couple with a profitable side gig. They boost withholding on the higher earner's paycheck, claim the child tax credit, and meet the safe harbor without quarterly vouchers. S-Corp owner, a December payroll true-up dials, withholding to 110% of last year's tax, wiping out penalties. Retiree, sets 12% on Social Security, tweaks W-4P, and does a December IRA distribution with high withholding to balance the year. That's the power of coordinated withholding. Work with a pro to model safe harbors, state quirks, and equity events so your plan fits. I'm David Robson. Thanks for listening to Tax Smarts Unlocked. Master your withholding, reduce anxiety, and keep more money working for you. Share this episode, update your W-4s, and enjoy calmer Aprils.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.